So with us today, we have two very bright minds in the world of trading here in the crypto space. We have Murad Mahmoudov and Balaji. So how about you guys just introduce yourselves and tell us how you got into the crypto space and your financial experience.
Sure. So my name is Murad Mahmoudov. Recently started a crypto hedge fund, Adaptive Capital. I got into Bitcoin in 2013, sort of right before sort of the previous bubble. Lived in China at the time. A lot of my friends were doing some sort of P2P trading, some OTC trading back there. So, and I was sort of a part of that community, and sort of kept track of the system ever since. 2016 onwards in particular, after working on Wall Street for a little bit, got more and more involved with crypto and sort of trading these markets, watching these markets, writing about the markets, and essentially here we are today.
Yeah, and I've seen some of your work. It's actually really, really good. We're going to get into some of that.
So my name is Arjun Balaji. I'm an engineer by way of background, and my trading is much more kind of quantitatively oriented. My big interests are in fundamental research, and the things that I'm most interested in kind of teasing out, over the last year and right now, especially as I think correlations will start to change over the next market cycle, is in figuring out whether there are fundamental data points that we can tease out, and whether we can take those factors and derive kind of meaningful signal from them.
All right, perfect. And so you're more of a fundamental analyst, and Murad, I'd say you're 50-50. Is that about right?
That's about right.
All right, and I'm more of a technical analyst, not that much of a fundamentals guy. So this is going to be a good little contrast. So let's start with, let's start with the broader market, right? Let's start with the fundamental view. How do you guys see? Well, we'll talk about the price at the end, right? But what do you guys are seeing, like, fundamentally within the crypto space, and how has it evolved over the last, let's say, 9 months or so? Like, once people started to realize that the bear market is here, I mean, some people are still in denial, but I'd say about 9 months ago, any analyst and trader, worth a damn realized we're in a bear market. So what have you seen, and how has it been evolving from a fundamental perspective? Let's start with you, Arjun.
Sure. So I think that the sort of lagging indicator in all of this has been actually the valuations for a number of different projects that are totally, that haven't even been launched yet publicly, that are still private. I think that 9 months ago, valuations were still, they were trending upwards like it was the 2017 bubble, and everybody was anticipating that these projects would come to market, that they would bring kind of new liquidity with these launches. And I think that that's really changed substantially. Now you see projects that are choosing not to launch, or you see projects that are very anticipated coming to market and getting a less favorable reception than anticipated. I think that that's the biggest delta that I've seen. Right now, I think a lot of people are still somewhat hungover, but a lot of the valuations privately have at least adjusted to account for this. I think that's the kind of big thing that we're seeing. The big difference has been primarily in launch decisions, is what I'm seeing.
Right, and before you answer, Murad, also think about, I mean, you're starting a fund, so you've been talking to a lot of people, probably globally, not just New York. I've been hearing for 5 years, institutional money is coming in, institutional money is coming in. Other than a couple of, notable people like Novograds, I haven't seen any institutional money come in. What about you?
It's going to take some time. I still think the next couple of cycles are going to be predominantly retail-driven still. I do think the share of institutional involvement will keep increasing sort of cycle to cycle, and hopefully the average IQ of the space hopefully will be increasing with it, and so we will see sort of the very, very small number of legitimate projects in the space continue growing in value, while sort of the tail end of the other 98% sort of hopefully dwindle down. That's sort of the best case scenario that I see. Probably will not come to fruition for another cycle or two, unfortunately, but a boy can dream.
Yep, and I think for what it's worth noting that you know, at the depressed prices that, you know, we saw last year, a lot of real institutional money did come in, right? We saw Andreessen Horowitz launch a $300 million fund committed to, you know, investing in just investing in cryptocurrencies. You know, Paradigm raised $500 million, including, you know, they had endowments and pension funds. Morgan Creek Digital raised a fund with institutional LPs. So I think that there is significant capital that is coming in, because at these prices, it makes it much more attractive than trying to, you know, deploy an LP investment at 17,000 Bitcoin.
Yeah, but my question then becomes, where are they trading it, right? Because volume on regulated exchanges like Gemini is non-existent.
Yeah.
And I mean, they could be going OTC, but those are more investment and position trades, certainly not swing trades, because they're not going to trade on these unregulated institutions that everyone is accusing of, you know, front-running their clients and manipulating the price, right? And from a regulatory perspective, a big fund would never trade there.
Yeah.
So, like, what do you think they're actually doing other than buying OTC and hoping the price goes up?
Yeah, and I think that's exactly what is happening, right? Because a lot of these funds are operated, you know, their orientation is much more Silicon Valley oriented than, you know, from Wall Street or traditional capital markets. So a lot of these funds, you know, they are looking at this thing across, you know, multi-year or kind of a much longer cycle. And instead of actively trading positions, a lot of them are, you know, looking for, you know, mispriced or kind of distressed assets, right, that were in the ecosystem, and trying to buy and hold them through the next cycle.
There's a joke in the community which goes something like, the Yale investment company is probably not going to be bidding up your utility token on Binance. So there you go.
Right, exactly. So you know what? Let's talk about other cryptocurrencies, right? So those of you that are familiar with my work, I'm Tom Vays, by the way. I have a YouTube channel about trading, investing. So I'm not a fan of all of these altcoins. I just don't think they're fundamentally sound. And I know it sounds weird to a lot of people, but I come from the traditional trading environment. And for me, any company in the S&P 500 is fundamentally sound. Any company in the NASDAQ 100 is fundamentally sound. I trade them, well, more so in the past than now, but I would just trade them. Like, I don't have to worry about the company because they wouldn't have made it that far. Sure, there was exceptions. I was working at Bear Stearns when it went down, and then there's the Enrons. Everyone loves to point out, you know, this one company out of 100 that happens to, you know, do something malicious or ends up, you know, cooking their books and go down. But to me, you have a large amount of companies you can trade that are fundamentally sound, and then you have penny stocks. And I was never a penny stock trader, even though I've met people that made a lot of good money in penny stocks. I think there was like, I looked at the 2017 rankings, which stocks made the most money in 2017, and it was 5 penny stocks. They made like 700%, 600% in the year. But I never cared to trade those because I don't know those companies. They're not fundamentally sound to me. So I've been seeing this space. To me, it's the same way. And Bitcoin is, to me, is investment grade. Sometimes I do like a bet, like, hey, if I offered you $10,000, would you take it in Bitcoin or in any altcoin of your choice, but you can't touch it for 10 years? And I'll give you double. I'll give you 20,000 in any altcoin or 10,000 US dollars worth in Bitcoin. Which would you choose? You can't touch it for 10 years. Almost everybody chooses Bitcoin.
Right.
But yet everyone says others will survive. So to me, Bitcoin is investable for the long term, and everything else is fun to trade if that's what you want to do. If you want to trade penny stocks, go trade penny stocks. What are your thoughts on that about fundamentals versus just trading of all of these crypto assets, and how different is Bitcoin from everything else?
Yeah, so I guess one of the biggest questions in the space that everybody wants to have a clear answer to is whether the store of value market or the cryptocurrency market in particular is going to be like winner take all or winner take most. And I guess depending on your view with regards to the answer to this question, you might be interested in investing in alts or not. I don't know, like I have become a little bit less ultra maximalistic. I think it could be completely winner take all, but I think we are only 1 decade into what will probably be a century-long paradigm shift. And I think for the time being, I don't think Bitcoin is going to take like 99% of the market. I think it might take 70 to 80%. But what I see, and I sort of agree more with Andreas Antonopoulos on this issue, I see more of like a Pareto distribution with 3 or 4 relatively sizable chains surviving for the time being. I think we're still very early on in the space. The market is very young, immature, inefficient. There's still a lot of uncertainties and anxieties ahead, and I see a couple of other alts surviving and even thriving for sure.
I mean, the way that I see it is it's kind of like the Ronnie Coleman quote, right? Everybody wants to be a bodybuilder. Nobody wants to lift the goddamn weight, right? Everybody wants to make significant venture scale returns in this space, but to do that, you have to take on some sort of risk exposure. Right, and I think that it's reasonably well understood what a lot of the risks are. Right, there's in many cases there's legal and regulatory risk. There's technical risk. In many cases, you have projects that are working on something. They might have the sort of regulatory clearance and everything might be good to go, but there's product market fit. Right, they're not building something that people actually want. So there are all sorts of risks, I think, involved here. That said, I don't see it, I see it a little bit differently. It's kind of, even in equity markets, you have all kinds of, not all equity markets are the same, right? You have, in the early part of any sort of new asset class, right, which very much I consider this to be a part of, you have a wave of assets that come in that are all of kind of dubious amounts of quality, right? We saw it in the late 90s with the dot-com bubble, saw it in the mid 2000s with a lot of the maturation of Asian markets, right, in South Korea and China. Even in traditional capital markets in the Western world now, you see it with smaller markets like Canada, right, where there's a lot more speculation, there's a lot more speculative plays, there's a lot of assets that are kind of varying quality. So I think that for the speculator who's willing to kind of sift through and look for potentially mispriced assets, there might be something. But yeah, I would agree that across the top 100, most of the assets right now are effectively vaporware and marketing.
All right, so let's see. We got a few more minutes left. You know what? Let's jump on price. Let's make sure we get the. I do the name of this panel is One Moon, so we should jump over to the price side of things. So I'll just throw my own commentary first. I've been a bear in this market since January 12th, I believe. January 12th or 10th. I went back through my videos and took a look when I decided to become a bear. And that was last year, by the way, not this year, January 12th. That was last year. And I've been saying 1,300 is the worst case scenario. And as we get closer and closer to it, we now bounced off of 3,100. The 1,300 is slowly becoming more and more of a reality, but it was my worst case scenario. Mm-hmm. My best case scenario was actually about 5,000. That was the ultimate best case, and we're now below that. I still think we're going lower than 3, but it's definitely debatable whether we're going lower than 2. I still think we will. What are your thoughts and why? And then we'll talk about some of the details in those metrics. So Murad, let's start with you.
Yeah, I took a glance at some of your work recently as well. I think you're a little bit too bearish. I think that we're not going below 2K, but we may or may not have already bottomed. I still lean 60% towards the fact that we haven't. I think we will dip into the high 2000s, mid 2000s, maybe one last time, but I don't think we're going below 2K.
And you have a time estimate for this?
Well, I think we're bottoming this year for sure. I think we're bottoming before the end of the summer. Essentially, I think the bull market will begin in 2020, Q1 or Q2 2020.
All right. What about you, Arjun?
So I have similar. My views are probably closer to Murad's. I think that if this market, if the bottom, I don't think the bottom is in yet, and I think that we'll probably settle somewhere in the low to mid 2000s. The reason for that, I think, is because there's a lot of dry powder out there that's waiting, right? That's waiting to deploy. There's funds that have been raised, right? Not just our dear friend Murad, but many Western funds and funds here in Asia, and in addition to ICO projects that manage their treasuries reasonably well, some of them have significant sort of 9-figure amounts of cash currently in their bank accounts, and so I think given the amount of dry powder, it's the amount of dry powder right now. My anecdotal estimate is that it's in well north of in the billions of dollars, right? So I think that whatever we do see, I anticipate that it'll be bought back fairly quick, and that won't dip for too long.
All right. Now, what about the altcoin market? And I know you mentioned earlier, like some people like myself see a winner take all, Bitcoin going back to 99% market cap. But there is another medium out there. Like all of these altcoins can survive. But my view is that over time, each of them are going to be a smaller percentage of Bitcoin's market cap. So Bitcoin doesn't have to go back to 90, 95, 99. Bitcoin can even be 30% of the total crypto market cap. The question is, where does number 2 sit? Mm-hmm. And even if Bitcoin is 30% of the total market cap, but number 2 on the list is less than 3% of Bitcoin's market cap, that's still separation and going forward. So what's your view on something like Ethereum, for example, because it has the most competition? Ethereum has insane competition from similar, decentralized-ish projects and similar centralized projects, because even Amazon, I can see Amazon offering a centralized database to execute all the ICO smart contracts you like, because it's all about being on the same platform for ease of data transferability. You don't really need the decentralization of Ethereum for your ICO. In fact, it could be a major technological problem for your company.
Yeah, so I think Ethereum is quite overpriced. I think I personally don't really believe in that these smart contract platforms are going to accrue much value at all. Frankly speaking, I have strong doubts about most theses in the space, and I'm mostly a monetary maximalist. I believe that the 1 to 3 store of value candidates are going to be essentially the only ones that are going to sustainably accrue value over the next several cycles. I think that Ethereum grew in price a lot because of essentially the ICO boom, where a lot of sort of ETH tokens were locked up on both sides of that transaction. I think Ethereum will have to deal with competition. They need to still prove that there is an even significant demand in the world for dApps, a lot of unanswered scalability questions, and I think that it's definitely far inferior to Bitcoin when it comes to just being robust money or robust digital gold. And I think that in the coming cycles, more and more people will simply realize this truth. And it will definitely, essentially, I am bearish ETH BTC.
In many ways, I think Ethereum is going through sort of an existential crisis right now, right? Most of the original architecture is being scrapped over, for a multi-year transition to a new, the sort of 2.0 architecture. I think that the sort of one killer use case for Ether to date has been basically serving as the reserve asset for the ICO bubble, right? And I think that we've seen over the last 1 year, we've seen given the global regulatory freeze and depressed prices, we've seen that totally dry up. I think that in the future, I think that that could change. I think that if that were to change, it would make me more optimistic about Ethereum. I think that even though there are a number, there's dozens, if not hundreds, of teams that are building products on the platform, I think that none of the products really have achieved any sort of meaningful traction or adoption. But I think that there are a couple of promising options there. But even with success, I don't know that meaningfully changes the sort of outcome. I think that what would be interesting to see if the market cycle does turn, whether the ICO market we saw previously would come back. I think that human greed is almost limitless, right? So I think that that's within the realm of possibility, regardless of whether or not how regulators or market participants feel about it. I think that if that were to change, I also don't know that Ethereum will be with the platform of choice. There's a number of other alternate competitors with which you can issue tokens. There's other centralized providers like Bittrex and Binance that are launching products like Binance Launchpad that allow for teams to do token distributions and launches. I think that with these kind of new offerings, I don't know that Ethereum as the sole reserve asset for this kind of facilitating these capital markets, I don't know if that's going to hold up over time.
All right, well said. And okay, so we got about 7 more minutes. So I want to follow up on something you said, Murad. And not everyone's going to be a trader. Not everyone should be a trader. In fact, I teach people how to be traders. And the first thing I try to do is let them know that maybe they don't want to be traders. Like I'm like the worst promoter of what I do. Because it's a rough job, and it is a job. It's like being a poker player. It's pretty much gambling. But as an investor, and you mentioned that you're not looking to invest in these smart contract platforms, but Bitcoin is a store of value. So make a case as to why a person should allocate a reasonable amount of their investment portfolio or their retirement portfolio. To me, a reasonable amount is 5 to 10%. So why should they do that? Why should they allocate 5 to 10% to Bitcoin as an asset class?
I think with Bitcoin and sort of store of value in general, we're probably looking at one of the biggest markets in the world. The store of value market as a whole is around 300 trillion. The monetary store of value is, I believe, 91 trillion in fiat and fiat-like instruments, almost 8 trillion in gold. Even if Bitcoin takes a small fraction of that, its price will be trading at an order of magnitude or more higher than it is today. I think we're still extremely early. I believe over time, superior products win in the market. Bitcoin, to me, is a superior money to both gold and fiat in many, many, many ways. And I think as time goes on, trust in Bitcoin, people being comfortable with Bitcoin, and just sort of its Lindy effect. All of these things will grow. And with every one of these cycles, you see people, Bitcoin is something that you need repetitive attention. And when people see for the 3rd or 4th time that this thing doesn't only not die, but continues thriving, they will start being more and more comfortable with it. I think Bitcoin isn't going anywhere. I think Bitcoin is here to stay. And 60 billion, or whatever it's trading at right now, is just the beginning. And I think that you can be, everybody's still extremely early. And I think allocating a small portion of your portfolio, doesn't even need to be 5%, just 1 or 2%, is a very, very wise move.
Well, let me just quick follow-up, because I wanted to get into the details of that. Why is the store of value market so big? And which, I guess, you can break down the store of value market into 5, 10, 20 components. So which of those store of value markets is Bitcoin most likely to disrupt?
Yeah, totally. There's a lot of different things people use as a store of value. There is a demand for various instruments and assets in the world for people to essentially save their wealth. People use real estate for that. People use bonds, stocks. Some use commodities. Many use gold. Most people use, a lot of people just use cash. I think for the time being, I think Bitcoin is competing against sort of the tail end of fiat currencies. It's definitely not competing head-on against the US dollar or the euro quite yet. But in countries with sort of dysfunctional economies or rapidly inflating currencies, countries with capital controls, and the list goes on. I think Bitcoin right now is still technically a collectible. It's still kind of a digital gold, but which is really, really early in its monetization sort of curve and evolution. It still has sort of very, very large shoes that it can theoretically fill. It's the fact that people can't take away from you or stop your transactions. Most people, when they will start realizing that beyond these facts, nobody can also print it. And I believe the UX around the entire industry will improve as well. With time, these things will become a reality. And as people will get comfortable with these ideas, so will their allocation in their portfolio. And I believe in sort of a post-fiat world, you will live in an age which was more similar to sort of the gold standard era, and sort of the cash allocation in people's portfolios will be bigger than it is today, because fundamentally cash itself will be more robust and more uninflatable.
All right, we got 2 minutes left. I actually want to do the opposite question for you, Arjun. So what scares you when you go to bed at night about, I guess, I'm assuming you have some value in the crypto space. I'm hoping it's mostly Bitcoin. So what scares you that we're all crazy and this was a big mistake?
Sure. I think that in this monetization process, there are significant risks, right? The future, every time I talk to Murad, I always get a glimpse of the future, but the future that Murad is describing, it comes head on with something that lots of men with guns will fight to protect. And so I think for me, the significant risks that, are in this process, one, global regulatory crackdown on, fiat on-ramps. I think that would be, significant setback, and it would set back to say, I think, many, many years, potentially derailing all of the progress that's been made. I think a significant technical bug. I think that what we've seen over the last year, a number of minor technical failures on large public blockchains. I think that we were very close to seeing a significant inflation-oriented bug with Bitcoin, which was narrowly avoided, in terms of doing any meaningful damage. But I think that there's still technical risk in that the project is still relatively early, right? We're 10 years into what will be kind of a multi-decade, undertaking. So I think that, the technical risks, certainly, I think for most people, they think of Bitcoin and Bitcoin development as a very abstract concept. For me, it's very real. It's something that keeps me up at night. And I think, the third kind of and most important thing is that I think that the default state, despite the fact that, there are headwinds, right? UBI is a headwind. Modern monetary theory is a headwind. Despite the fact that there are headwinds with Bitcoin, the default state is still that, Bitcoin dies from irrelevancy. And so I think that, focusing on, explaining the asset and educating as many people as possible, I think is one of my primary orientations as a result of that.
All right, cool. Thanks a lot. It looks like we are out of time. So unless you have like 2 sentences to add, Murad, what scares you at night, you guys go ahead, tell the people where they can find some of your work.
Yeah, totally. I would agree with Arjun. I think to me, I'm only particularly concerned with the first out of the 3 sort of risks he mentioned, and that's definitely sort of the government crackdown. I do think that sort of with every cycle and with every year, as you see more influential figures, institutions, ultra-high net worth individuals sort of get involved with Bitcoin, and it being slowly but surely integrated into the financial system, a complete sort of ban on Bitcoin is becoming slightly less likely with every day. But yeah, sort of the regulatory risks are probably still the highest in my mind.
All right, cool. So where can people follow your work?
You can find me on Twitter at MustStopMurad.
Cool. Arjun?
Likewise, on Twitter at ArjunBLJ.
Perfect. I'm Tone Vays. You can find me on Twitter as Tone Vays, and my YouTube channel is also Tone Vays. Murad has been on this channel. We'll have him on again. And thank you so much for listening to the When Moon panel. Oh, and when is Moon?
Moon is...
When and what is your definition of Moon as we go off the stage?
Well, the moon is in 2023, I think.
2023. At what price is Moon to you?
100K?
100K. Arjun?
The moon, at least 100K.
At least 100K. You have a time?
Want a bubble 5 times this big in 3 years. Everybody buy Bitcoin.
Nice.